You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back here. It is Wednesday, time to roll out the Futures Rundown. No rest for the wicked, coming hot off a doubleheader of options boot camp and then diving straight into the fun that is the Futures Rundown. You know what? The producers hate me. They hate my voice, but they love you folks, listeners. Just handing you content left, right, and center. Remember, if you want to get both episodes of OBC in your ear holes right now, you wanted to hear them live as they were recorded, heckle Mr. Dan on the show, all kinds of other fun, as well as get not just one, but two exclusive shows. Awesome pro Q&A with our buddy, Mr. Scott Nations. He plays around the future. We'll have to get him on the Futures Rundown one of these days, as well as, of course, Options Oddities, another show that's been a banger on the network of late. The only place to go to get all that fun, the optionsinsider.com/pro. Congratulations to our pro member, Joe Lewis, who Dan gave the February Pro Trading Crate to on our Monday episode of the Option Block. You want to get your name in the hat there, listener. That's a fun prize, if I do say so myself. Head on over to the Pro. Join the fun. It's a cool crew hanging out over there. Speaking of cool folks joining me, let's get on out, see who's joining us on the old Futures Rundown today. I'm pleased to welcome on, for the first time on the Futures Rundown, our pal from OBC last week, Mr. Jermal Chandler from Tasty Live. Jermal, welcome to the Futures Rundown for the first time, sir.
Glad to be here, Mr. Longo. You are the hardest working man in trading, pulling the double header, man.
I am
the
hardest working man in options biz. You could say that for sure out there. Yes, my producers, they hate me, Jermal. That's what it is. They say, hey, just crack the whip, keep going until his voice shrivels up and dies out here. But Mr. Jermal, we were obviously talking options on the old OBC last week, talking futures a little bit this week. Give our listeners a little bit of an overview. In general, what is your use case for futures these days?
Yeah, I would say we're lucky because doing this show right now, as the market has been moving around quite a bit, I think this is a great time to do futures. I typically will trade equity futures, micros. Typically, those are pretty efficient and have a pretty good price point. I also will trade oil. I will trade bond futures. Probably a little more options than the actual futures on bond futures, to be honest. But that's mostly it. I've definitely traded VIX futures in the past. Haven't traded them as much in recent years, but usually big things like that. So if it's big equities, futures, or bonds, oil, gold as well, I'll trade those frequently. And like I said, every now and again, the VIX futures.
All right. Speaking of what's trading, let's go find out, listeners. It is time to head on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, let's dive on into the trading pit. As Jermal mentioned, a spicy week out there across a variety of assets. Of course, the last few weeks we've seen tariffs really rocking the markets, sending equities into a tailspin, vol soaring. For a few weeks there, it seemed like we got a shock to the system early in the week, and then vol would come back down and markets would come back up as the week has progressed. For the last week and a half or so, it's been a lot more topsy-turvy, a lot more intraday swings, and a lot more red on the broad equity futures screens, and a lot more green on the vol screens out there. And Jermal, they're not disappointing again today. We're recording this, listeners, coming off the heels of the State of the Union. Trump doubling down on a lot of his tariff threats, but also his Commerce Secretary may be pointing to a bit of a ray of light out there for some of our trading partners out there. So maybe the market's feeling a little bit better out there today, listeners, in terms of the prospects for tariffs really wiping out a lot of the gains. In fact, yesterday we got down to, I think, around 57.30 in the S&P, and we had wiped out all of the gains post-election. VIX cash soared to around 26. So we were seeing a lot of spice, a lot of tumult priced into the market. And again, playing out again today as we kicked off earlier today. Markets doing a repeat of that, selling off to around 57.40, I believe, in the S&P, before turning around, Jermal, and just hauling butt to the upside, gaining about 100 handles, hanging out north of 58.5 right now in the S&P. So it's been wild on the equity futures front. It's been wild on the vol front. And of course, a lot of other assets, flight to quality assets like gold, of course, like the rates. It's been just a wild time. So Jermal, let's start there. It's been even since we chatted last week on Options Bootcamp, it's been pretty wild times out there in the markets. What's really catching your eye in the futures realm this week, sir?
Yeah, so it's really been wild, like you said. I didn't get a chance to listen to the address last night, but no need, right? I mean, this is actually one of the great things about futures. Futures can tell you everything you need to know, and clearly, if you just think about earlier this week where, like you said, markets are really scared about tariffs, and the one thing markets do not like is uncertainty, and that's what we saw. The VIX showed us that in kind. It really took off here, one of the biggest movers on the week, initially until today, of course. But to get to my futures, I got to, of course, talk about options. I'm an options guy first. I did put on a lot of long delta trades via options. And as a result, it's giving me the opportunity to look at maybe shorting the market here where we are now, just as a trade, right? Like not necessarily something that is going to be a core position, but just as a trade, because we've seen a lot of gyrations in the market this week. We've seen times where the market was up 50, 60 handles only to lose it and go down the opposite way. We've seen 140 point ranges on the ES. And in certain days in this week, not for the week, like certain days, we've seen 140 point ranges, meaning top to bottom change of 140 points. So it's been that kind of week, and I think those are the perfect weeks to use futures. So, like I said, I'm looking at shorting just briefly for the MES contract in S&P 500. Any other things I've done this week? I had not traded oil, although it does look interesting at these levels. That's really kind of fascinating to me, seeing how oil has fallen. But that all depends on, a macro view of yours, right? Like if you feel like this is really a global growth issue and maybe we see lower oil prices, I really haven't paid much to the type of production that we're supposed to be getting from some of the other countries. So there's always that kind of story with oil, right? But it's really been It's really been looking at VIX this week, although I haven't traded it, looking at ES or MES, if you will, looking at oil and possibly looking at what we like to call, or in Tasty, the scoopy, where you're able to scoop it at a lower price and maybe sell it out at a couple of bucks higher or $2 to $3 higher. I will say, I have kept an eye on Bitcoin because I have noticed this stronger correlation with Bitcoin and the S&P 500, if you will, S&P or NASDAQ, but just more recently, right? But it's mostly just been as a result of when we get these type of very volatile markets, correlation tends to go to one. We see a lot of things sell off together. We see a lot of things get bought back together. And so as you can see, Bitcoin is also moving along with the market kind of in the same direction today. It's been fairly correlated. So those are, a lot of the things I've been looking at, Mark. I mean, there's been plenty to look at. We as traders, as you know, love this type of week. I mean, sure, it's a little gut wrenching for a lot of people, but when things are moving around, I mean, it's just a lot more interesting in the market.
Yeah, you hit on a bunch of things. We could do a whole show on each of those, a whole show on the moves that's been going on in crypto of late, Jermal. In fact, we do have a whole show about that. Check out the Crypto Rundown on Monday. That one's been pretty wild. Of course, the strategic reserve talk driving a lot of action out there in the equities, obviously in gold. We'll get to maybe a little bit of crude a little bit later as well. But it's wild time across a bunch of assets. Again, a good time to be doing a show like this. It's interesting, Jermal, for the last few years, everyone's been putting out, the hashtag BTFD. And whenever we saw a big sell-off in equities, that was the time to come in and buy the family-friendly version, the freaking dip out there in the markets. But a lot of people are starting to question that. In fact, we had Scott Nations on our Pro Q&A yesterday, and he came in and just said, this is the least confidence he's had in BTFD in about 3 years, he said. He really doesn't want to touch any of these dips right now. Now, of course, saying that, when we threatened to break 5,700 yesterday, if you came in and scooped some futures listeners, you're looking pretty good right now as we've rallied over 100 handles from that. But it brings up an interesting question, Jermal. First off, how were you feeling when we were threatening to break 5,700, not once, but twice in the last 24 hours, really? And then B, where do you fall on that whole notion of BTFD? Is that dead, particularly in the equity markets, sir?
Very good questions, Mr. Longo. I got to tell you, look, I've been sort of leaning into a few long deltas here. I mean, basically, we've been on the fall ever since February 20th, and I've been leaning on to a few deltas here and there. At Tasty, I'll tell you what, as you know, I started out trading at a prop firm, and you're always trying to use as much capital as possible at any given time. Very different style of trading, just very, very different from retail trading. As retail traders, you really have to become disciplined at keeping capital available for these type of dips. I mean, it's hard, especially when it's been sort of a slow build to the downside over the last couple of weeks. So I've tried to do I've tried to do a few long delta trades here and there, mostly because it's not so much the dip, I would say. It's once volatility picks up, right? Like we know once volatility gets above 20, which is that long-term average, it gets in the 20, 25 range. Sure, we could see a spike to 35 or 45, but chances are we're going to see some mean reversion in volatility. And so I've kind of let that be my guide. I've tried to lean in, get a few short, pick up a few long deltas here and there over the last couple of days. Yesterday was a little unnerving, not going to lie, because, again, like you said, we came close to breaching 5,700, although my chartists out there will note we did touch the 200-day and just below the 200-day simple moving average, and I thought that was kind of telling. We bounced off of that. We did it again today. Is it going to happen for a third time? Who knows? I mean, who knows how long this this rally lasts? And so I think that's the thing. But I'm also paying attention to my duration, I guess you will, with options, right? I'm going further out. So as a result, when I'm looking at my futures, and that's one of the reasons why I'm looking at, okay, do I want to fade this rally here with futures? Because this is a very strong rally, and we've seen more sell rips than buy dips more recently. So I do think there's an equal opportunity for both in this type of market, to be able to buy the dip and to be able to sell a rip here and there as well.
Let's see what folks are buying and selling this week right now. Again, this is just a snapshot. You wait 5 minutes, listeners. These charts are going to change quite a bit. We are moving that quickly. But right now, coming into the start of the show, let's go to the upside first, listeners. Let's see what's lighting up our tape to the green. Let's start number 5, listeners. Our old pal, OJ. It's the May contract up about 4 2/3% this week. So OJ gaining back some of what it's lost so far this year. And number 4, we've got Bitcoin, both the large and the micro futures, up about 6 2/3%. You know, it's been a wild week for Bitcoin. All that strategic reserve talk driving us up, then coming right back down the other side. So if you're looking for vol and the equities and VIX north of 20 handle ain't doing it for you for whatever reason, then by all means, Bitcoin is exhibit A of where you can go for some ball right now. Number 3, this one's been painful for all of you Starbucks fans out there. It's coffee. Gave up a little bit last week, going back to the upside again this week. The May future up nearly 9%, 8.76%. So unfortunately, that latte ain't going to be any cheaper for you out there this week, listeners. Number 2 is our old pal on TWIFO, a frequent offender. It is the April Nat Gas contract, up nearly 11% this week, 10.63%. And the big dog, take this one with a grain of salt, because I guarantee you if I re-rack this chart in 5 minutes, it's going to be different. But this is our old pal, the VIX, the March future, up nearly 15%, 14.98%. I know, for all you hardcore vol fans out there, percent of percent, it's maddening. Again, just make your peace with it. B, Jermal, where do you fall on the whole percent of percent debate when it comes to VIX? Have you made your peace with it like I did a long time ago? And then B, what's catching your eye in our green upside movers this week, sir?
I made my peace with it. I mean, it is pretty funny to me. I will definitely mention it sometimes on my show, just to get on their nerves. Those super big vol people out there, you know who you are. And as far as what's catching my eye, it's Mark, it's the toughest thing that I've had to deal with for the past 2 weeks. For whatever reason, I decided to sell a call spread in natural gas a few weeks back, and I'm kind of choking on that. At least it's just a spread. At least it's, it's defined risk, but it is kind of hurting. But I've rolled it further out, and I'm just gonna sort of manage it as it is. We'll see how it goes.
All right, listeners, anything catching your eye in that green lighting up the tape? Let's go to the dark side now, Mr. Jermal. What's lighting up the tape? I've been talking too much already today, listeners. What's lighting up the tape to the downside out here this week, listeners? Number 5 on a list you don't want to be on unless, of course, you're heavily short or you got some puts in your back pocket for a rainy day. Hard red wheat, the May contract off nearly 7%, 6.81%. So giving up some upside in wheat. Number 4, it's sugar number 11, listeners. The May contract off a little over 7%, 7.04%. Number 3, keeping it in the ags, it is corn. Also going out to May, off 7.7% this week. Number 2, we've been talking about this on the show a few times. Giving up the ghost out there is the April ethanol contract, off 8.18%. And the number 1 loser for the week, Jermal, is our old pal cocoa, off 10.86%. Anything catching your eye in the downside table this week, Mr. Jermal?
Mark, it's interesting when I look at wheat and I look at corn. I wasn't really sure which way those were going to be affected, because those are definitely, when you see those on this list, you got to assume that those are related to some of the geopolitics that's going on. So I would say those catch my eye the most. Sugar is not one that I typically see too often. I don't really trade it. And ethanol, as much as it's interesting overall, that's not one I've had the luxury of trading before. Cocoa, I've definitely heard a lot about that in the news over the last couple of weeks when it was getting bid to the upside, and now, hey, it's falling. We see that quite often, but definitely wheat and corn. I mean, those I think you want to keep your eye on, because they're in the crosshairs one way or the other, whether it's with tariffs or whether it's with the Russia-Ukraine war. There's some stuff going on there.
All right, listen, let's see what's going on right now in the futures market today. Let's tell you what, let's not just do a top 10, let's do a top 15 most active, because I see some cool products in that top 15 range as well. Remember, we try to filter this to get rid of some of the bite-sized contracts like the micros. So you're not going to see the NASDAQ or the S&P micro in here. But number 15 today, listeners, on a very active day, cost you about 175,000 contracts to break into the top 15. So that's not nothing. That gets you to the April gold contract, taking in the number 15 spot today. Number 14, our old pal Nat Gas, aka the Widowmaker, also the April contract. 209,000 contracts on the tape. Number 13, it's May Corn. Again, we're just talking about May Corn on our losers for the week. Little north of 250,000 contracts, 253 on the tape right now. Number 12, out to the world of FX. It is the Japanese yen, keeping it near dated. The March contract, 265 on the tape. Number 11, we got our old pal crude oil, WTI in this case, the April contract, 344 on the tape. Now we got to our top 10 listeners, and spoiler alert, a lot of rates, a lot of equities in the top 10. That's why we do a top 15 to mix it up a little bit. Number 10 is the Ultra T-Bond, going all the way out to June this time. 384,000 contracts on the tape for number 10. Number 9, to the realm of FX we go. In particular, it's the Euro. Near dated, it's the March contract, 450,000 contracts on the tape. Number 8, all the way back out the yield curve. It's the 30-year June contract, 563 on the tape. Number 7, to the realm of equities we go. It is the NASDAQ E-mini. March contract, 670,000 contracts on the tape. Obviously, if you pull out the micro, it's going to be even more, but we tend to skip that one, listeners. Number 3, it's 3-month SOFR going all the way out to December again. That's a trend we've noticed in SOFR for a while now. They like to go all the way out to the end of the year. 783,000 contracts on the tape. That is the only December contract in our top 15 most active today as well. So SOFR kind of playing by its own rules of engagement, which we like to see out there. Keeping it in the rates for the top 5. Now, number 5, it's the Ultra 10-year, the June contract. So going a little ways out there as well. 974 on the tape for that one. Number 4, we got the 2-year, 990, also June. A lot of June in the rates complex. Number 3, it's the 5-year, also June, 1.67 million contracts. Number 2, it's our old pal, the S&P E-mini, going all the way to March. Equities don't like to play that far out, listeners. The March contract, 1.87 million. And the big dog, once again, what will it take to topple it from its throne? Not today, listeners. It's the 10-year. Once again, the June contract, 3.03 million. Mr. Jermal, we did a lot of living in that top 15. We covered just about every product complex known to man. Anything really standing out to you there, sir?
Oh, a lot sticks out to me, Mark. This is incredible, actually, because by my count, you got nine issues here that are either bonds or currency related out of 15. And then in the top 5, you got 4 out of 5 that are bonds. I mean, that's all that says is tariffs, tariffs, tariffs. That tells you everything that's going on in the market right now and how important this discussion and sort of revolving around tariffs is. I mean, that's pretty incredible when you just see that. I mean, you know, you got the 10-year note. I mean, that's obviously at the crux of a lot of what's going on, 5s and 2s. The 3-month SOFR going out to December again. That's really interesting, right? What's going on with the rates going out that far? So this tells you everything you need to know about what's going on in the stock market right now.
All right, listeners, and we talked about what's trending for this week and indeed what's active today. But you know what? The year is still young. It's sometimes interesting to parse what's going on year to date so far. A lot of products have already had great or terrible years, and it's just the beginning of March, listeners. Let's go to the upside first, see what's dominating the tape year to date so far, what trends we're seeing shaping up. Number 5 for the year to the upside, listeners, it's our old pal lumber. Are dead trees starting to get hot again? It seems like the answer is yes. Up nearly 12.5% for the year so far. Our old pal VIX making it at number 4, up again nearly 15%, 14.82%. Take that with a grain of salt. As Jermal said, we could outperform and VIX could continue to explode, but 9 times out of 10 it's going to revert back below that 20 handle. So that's probably a short-term trend, but we'll keep an eye on it. We did the top 6 today because we were cheating a little bit out here this week. I think because we wanted to get lumber in there. So technically lumber number 6, the VIX number 5, listeners. And then we've got number 4 here. We've got our old pal steel. Again, talking about tariffs, steel firmly in the crosshairs there. We got June steel up 15.86%. Number 3, talking about copper tariffs in the State of the Union as well. I bet you didn't think copper would make it into the State of the Union, but it did. The May contract so far this year up nearly 18%. Number 2, it's our old pal coffee. Again, I'm sorry, bad news for the Starbucks fans out there. Don't shoot the messenger. Up nearly 30% so far this year, 29.6%. And the big mover of the year so far to the upside, listeners, it's Nat Gas, up nearly 43%, 42.67%. Mr. Jermal, any surprising trends up there? I mean, some products already having a great year, and it's only March.
It's already only March, Mr. Longo. It's pretty crazy. I mean, when you look at some of these things, lumber, I know, is one of the ones that people are a little worried about when it comes to tariffs. Midwest steel, that really probably surprises me. We've talked about some of the metals here, and some of the metals have been bid this year. Along with obviously copper making its run more recently, but there's gold and then there's silver. But steel showing up on the top 6 charts here is really interesting to me. You wonder what's the impetus behind that. And obviously there's been a big situation going on over some time now with U.S. steel and whether Nippon Steel is going to be allowed to purchase them. My guess is probably not. But these are pretty interesting.
Yeah, if you've been listening to our Options Oddities show on the Pro Listen, we've talked about some great covered calls that have been going up in Cleveland Cliffs out there of late. A lot of that driven on the back of all this steel activity. Yet another reason you should be checking out the Pro. All right, to the downside we go, listeners. Number 5 this year. These are the trends playing out for this year. We've been talking about the problems besetting the EMs out there, uranium and lithium. This week, uranium got kicked to number 6, but lithium making it into the bottom 5. Lithium off nearly 14% so far this year, 13.88%. Number 4, it's dairy, dry whey in particular, off nearly 23%, 22.86%. Number 3, going out to the realm of cocoa. Like yourself a little bit of chocolate, maybe you're happy about this news. Cocoa off 25.47% so far this year. Number 2, listeners, it's our old pal OJ, giving off 33.8% so far this year. So, man, OJ coming crashing back to earth. And number 1, unfortunately, again, this is not a list you want to be at the top of unless, of course, you're heavily short. It's our old pal Ether just taking it on the chin, off 35.5% year to date. Mr. Jermal, anything catching your eye in our dark side movers for the year, sir?
Well, as usual, Beeks is late on the report, and that's what's when nobody really knew what was going on with OJ and how this was going to get here. But I would say Ether. Ether definitely catches the eye for 2 reasons. Like we said, we've noticed, there's always a correlation between Ether and Bitcoin, and we've noticed some of these cryptos have been a little more correlated to equity markets. So this is just a larger probably drawdown, of course, when you're talking about a crypto. But at the same time, keep in mind, cryptos, I mean, over time, their drawdowns are something on the order of it's 70 to 80%. So this is actually small in the realm of crypto when you think about it. So while this is a pretty big number, 35%, it could always be bigger in cryptos.
There you go. It could always be worse in the world of crypto. It's unfortunate that music means we've come to the end of another Futures Rundown. Man, we did a lot of living, packed a lot into the show today, Jermal. We talked about, you name it, VIX, dairy, crypto, crude, equities, ags. I don't think we left anything out on the show today, Jermal.
Nothing at all. Mark, I tell you, I love these type of markets. This is great. It's a little unnerving when you see markets fall the way they have, but it's opportunity. You got to find opportunity. You got to be smart and keep some cash available to them because you just don't get these opportunities very often.
Wise words, sir. And in the meantime, if folks want to check out what you're putting out over there in the land of Tasty Live, where should they go? What should they do, sir?
TastyLive.com is our website. We also have a Tasty Live YouTube website, which YouTube page, if you will. That's where a lot of our live content is. We have shows on 8 hours a day these days, and we start at 7 a.m. We go through 4 p.m., and we're putting out a lot of content all the time. My shows specifically are Engineering the Trade at 1:45 to 2:15 p.m. Central every day except for Wednesday. And then I also do Futures Power Hour, noon Central to 1 p.m. Tuesdays and Thursdays. But we got a ton of content out there. And, of course, my name is Jermal Chandler, Jermal Chandler. You can look me up on Google and easy to find.
Check the man out. He's putting out a lot of great content over, a lot of great stuff over there at Tasty Live if you're not checking it out already. That's going to do it for us on the network today. That brings to a close our triple header. Back again tomorrow for a double header, kicking things off with our friends over there at SIBO and the Flow Master, talking all things unusual activity and all sorts of fun on the option block, followed by checking in with our friends over there at CME. What's lighting it up on the futures options front over there on This Week in Futures Options. Friday, of course, we wrap up the week with volatility views. Then we come back one final time exclusively for you pro folks to talk the weird, the wild, the crazy trades over there on options oddities. Again, that one's been quite the banger of late, so make sure you're checking that one out. Only place to get it, theoptionsinsider.com/pro. I will be traveling down to the Futures Industry Association Conference down in Florida next week, so trying to dig up some interesting new nuggets for you folks here on the Futures Show. So we'll see if we have a live episode of the Futures Rundown next week. Depends on how we can work it into my travel schedule. Definitely be back in 2 weeks, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.